what's curious about Airbnb is that it has been so negatively affected by the COVID pandemic that every number that one would want to see moving in a positive direction for a company coming to IPO is actually moving in the wrong direction. Now, the questions remain, will it do well through the balance of the pandemic, and how well will it recover after the pandemic? And those are really important questions, but they aren't, to my mind, the most fundamental, because the pandemic has been layered on top of a company that has relatively weak financial health.
The company has really tightened up its operations and has produced profits in this last quarter and is recovering nicely after a huge drop of 70% in revenue right after COVID. That was the second quarter. So the third quarter is looking good. And we think investors are going to look sort of over the hill here.
Well, for more on this, Santosh Rao joins us again to discuss this. He's the head of research at Manhattan Venture Partners. Hi again, Santosh. Now, this is undoubtedly a huge moment for Airbnb. Ahead of the debut, the shares were priced at $68, valuing the company at $47 billion. But the implied value could actually be more than double that as the stock surges ahead of its first trade. Do you think Airbnb is worth all that?
Yeah, thanks for having me back. Airbnb is a great company. The valuation, of course, is going to get stretched a little bit as they come off the gate. I think what we are seeing, 50 billion, 60 billion was our valuation going into this. So I think going 100 billion, as the valuation is showing right now, it might be priced at 150, I believe. So that's a pretty high valuation. So it can't be justified. Around at 68 bucks, that's about 11 times sales, forward sales. That's easily justifiable. This company is at the sweet spot. It is going to be a big beneficiary as we come off this pandemic. They showed during the pandemic that it's a very resilient model. They almost went out of business. The bookings collapsed, the revenue collapsed, but they kind of reinvented themselves. They downsized, right-sized the business, recapitalized the business, and they kind of came back. So they kept the hosts happy. So that shows the resiliency of the model. There's a high operating leverage. So this company deserves a premium valuation. 100 billion is too much, but around 50 billion absolutely is justifiable, just given the growth ahead.
Now, unlike other tech companies that have gone public, Airbnb has actually managed to turn a profit. We saw profits in the second and third quarters of 2018 and the third quarter of 2019. Does this then make Airbnb a safer investment than, say, non-profitable techs like Uber?
Yeah, it's absolutely. I think like 2019, they were profitable before 2019. In 18, they were. 19 was an investment year. So coming into this year, you have this pandemic, but they are well positioned to be profitable. It has this global footprint, very well diversified and spread out. And that's definitely helping them against the hotels. So this company has very high operating leverage, like I said earlier. So the profitability is right on the horizon, if not already there. So you're going to see this company grow on revenue, the top line. Plus, we still haven't tapped a lot of other areas. The experiences business is going to be big. That's still ramping up. Then we have the Japan Olympics. They have this huge tie-up with the Olympic Association, where they're going to be front and center in Japan when the Olympics happen. They're going to do they're going to pick up a lot of hosts there. In Asia, it's a big presence. China, India hasn't opened up as much. China is just opening up. So there's huge potential ahead. So all things said, so they're going to grow into whatever valuation that the market puts on them right now. But at this point, they're very well positioned.
Okay, let's see how they trade. Santosh Rao, thank you again for joining us from Princeton.
Thank you.